And welcome to another episode of the Franchise Academy. Thanks for tuning in. My name is Tom Scarta. And as you may know, I am a franchise consultant by day and a podcaster by night. So I own a business that matches people with franchise opportunities based on skills and personality and goals, kind of like the eHarmony of business is what I like to call it. And I help people understand the franchise industry and whether it's the right fit for them or not. And I work with folks that are frustrated with their career and cringe at the thought of going to work in the morning. I work with people also that want to diversify their investments and get into a business that will give them dividends as they retire on their tropical island in the Caribbean. So anything and everything you want to ever know about franchising, this is the place to come by and find out all about it. I also am the author of Franchise Savvy, a #1 bestseller on Amazon in the business book section. And also I have a course on how to buy a franchise, A to Z, everything you need to know. And that's all on my website, thefranchiseacademy.com. Today, I am interviewing someone from outside of franchising and someone who brings a wide breadth of knowledge in investing, which is a big part of this platform. So I'm bringing today a great guy by the name of Roger Khoury. So Roger is an expert in market forecasting, and he developed an innovative type of kind of tool that you can use called market vulnerability analysis, which enables market participants, meaning stock market investors, to achieve consistent and sustainability in the performance and results of their stock portfolio. And so if your stocks are doing well, then it'll give you the ability to diversify into franchising someday. So I want to welcome in Roger. Hello, Roger.
Thank you. Hello. Thank you for having me.
This is so great. I'm so happy to have you on. So I just got to kind of dive right in. I mean, this is so interesting and kind of the angle that you take in, looking at stocks. What is a market vulnerability analysis?
So that's a great question. People get confused all the time with that. If you think about just kind of the word vulnerability, the last thing you and I or anybody watching wants to be vulnerable to a downturn or to a bad experience, right? So being able to analyze when and where our investments are at risk, where there's a vulnerable time that we can experience a significant correction or even a crash. We'll talk about how we can actually forecast those pretty accurately. I've been doing them since probably for about 10 years now. But it's a fascinating aspect that allows you to look at the stock market, the futures market, commodities, really anything that you can throw on a price chart, financial markets. It looks at it kind of from a holistic 360-degree perspective. Think about like if you buy a diamond, you want to buy a diamond, you never look at one facet of a diamond. You look at all facets to make sure there's not a flaw on the other side, which would dramatically change the value of that and the quality of that diamond, right? Sure. So most professionals, which means absolutely all amateurs and retail investors, look at 1, 2, or maybe 3 aspects when they're analyzing the market. Usually fundamental analysis. They'll use technical analysis. They might use some news and that sort of thing. But that's about the extent of what they'll look at to make an investment decision. What I found really kind of through serendipitous events in my life was there's actually 8 major factors that drive price up and down in the markets. And if we're looking at only 2 or 3 of them, you're going to be blindsided by 5 others. You have no idea that they're there, and you don't even know why the market took a hit. Right now, people can speculate. People can say, "Oh, well, this thing triggered the market." What's interesting is, do you remember when Chipotle actually took a very rapid decline? It crashed because of the E. coli breakout. People were dying.
Oh yeah.
Now you and I can think logically, well, that was because of E. coli. The market crashed. But Tom, what if I told you that several weeks before, Chipotle stock was already in an environment where anything could trigger a massive correction? And if you could see that the environment is conducive for a correction, you could now take defensive action. So that thing wasn't as surprising as some might think. Now that sounds probably a little bit kind of like mysterious and magical, but really isn't. The best analogy I can give you is you and I couldn't walk under a clear blue sky and suddenly have it thunder and lightning and storming overhead, right? It takes clouds to form, and that takes time. But just because you have clouds over your head doesn't mean it's going to rain, right? So it takes a certain environment to cause those clouds to produce rain, and that takes time. Well, if those things, those factors that cause a thunderstorm to occur take time to build, they're identifiable, well, that makes that forecastable. So you might have, the chance of a thunderstorm coming in your town, 80%, 90% chance. You still have a 10% chance it might not. But if you've got an 80, 90% chance for a thunderstorm, wouldn't you kind of take appropriate action? You kind of change your plans a little bit, right?
Right. Yeah.
That is market vulnerability analysis. It looks at all of the 8 major factors of supply and demand that cause prices to move. And so we're able to forecast very accurately when, where, right? In any market, the environments are now conducive for significant correction or a crash. So there's on my website at raiseyourfinancialiq.com. There's a case study and there's a little educational path there. One of the videos will show at the time when the coronavirus was happening, right? We were able to forecast the coronavirus crash. Okay. And there's videos of other crashes that happened before that in 2018, 2015 crashes. And I think it gives people a perspective, some hope that, hey, look, having investment capital, making money in the markets is one thing. Keeping it is entirely another, right? So knowing how to keep your money is so important. And I think it's really important for those who have money that's been growing in the markets. It's so critical that they're able to take a little more control over how they manage that money. One of the things that they could do to take control is obviously taking some of those gains and putting them into a franchise, which the benefit of a franchise, I wish I would have met you 10 years ago, but which, it's amazing, when you meet someone, you're like, where have they been all my life? But the thing is, when you put it in a franchise, the benefit of a franchise is the fact that someone's already figured out what not to do and left you with what is the thing to do so that you can repeat that and duplicate that and grow. So again, franchises are great opportunities that you're making available, and with all the wealth of knowledge that you bring to the table, it's a great way to help people avoid learning the hard way, making those costly mistakes that can take them years to make up, right? Well,
right.
The first thing I think that people have to do is know how to manage that money, because if you've got money you put in a franchise, great. Now the franchise makes money. Well, what are you gonna do with the money that the franchise makes? You're probably gonna want to parlay that into other franchises, but you're probably gonna want to have some retirement 401k. You want to have some dividend yielding stocks, So you want to have a multifaceted approach to kind of cover yourself on both ends, right? So investments in the market, delegating them out to a professional who makes money most of the time, whether you win or lose, because they're charging you fees for managing that money. That person doesn't necessarily have your best interest at heart. Okay. No matter how good of a friend they are, no matter how much lip service they pay you, they also are depending on your money there to maintain their paycheck, aren't they? So there's a little bit of an interesting kind of dilemma there, right? So a lot of them don't want to rock the boat. So you might not get great performance, but you might not take the biggest hit. But one of the funniest things I always get is when someone says, when the market crashed 50%, I only lost 30%. Like, that's a good thing. So your money manager did you a great service by only losing 30% instead of 50%? Come on, why not hang on to the majority of your money, right? Making money and keeping it is a little bit of a skill that I think everyone should take the time to invest in.
Yeah, I think that it's important for everyone to understand how their money works. And there's a lot of gurus out there that will tell you, learn how it works, and don't, get a coach, but don't just give it to somebody and not think about it. And that's where a lot of people, I think, get in trouble. So, whether you're a great, golfer, or a great, any sports, or in really any, in acting. I mean, these people have coaches. Everybody has coaches. Yeah. So you're like a coach for somebody that is in the stock market investing. Is that right?
Yeah, I mentor and coach people all the time. I only take a limited number of people per year so that I make sure that I have the time and availability for them. And my clients become like family to me. So I love I think you can tell I'm an extrovert. So I love people. So I love having relationships with people. And it's a fun way to be able to leverage my expertise and what I've done for myself to help others do for themselves. But I think you're right. Without accountability, people tend to drift. It's very natural to drift. So when it comes to something with like money that has a lot of emotional draw to it, very different than any other type of endeavor, it's so critical that you have that accountability piece. Study after study shows that, when we go into anything, our rate of success and our ability to profit goes up by a minimum of 400% when we have accountability. So that's why I really believe strongly in the mentoring coaching aspect. And of course, you provide the training and the foundation for them to be able to build off that. A lot of people are intimidated, Tom, by the investments. It's, well, I've never invested. I don't know anything about the stocks. I don't know. You don't have to know anything. It's funny. Some of our best clients are the ones who have zero experience. Right. Because they don't have any bad habits or baggage they come with. They come in and they just follow directions because they don't want to make a mistake. And that's all I ask for is like, look, if you just follow my directions, I'll guarantee your success. I'll guarantee your outcomes. Okay. Because it's like building a cabinet. It's a process. If you do what I tell you to do to build a cabinet, it's impossible for you not to have a cabinet at the end of that process. So It's not, I'm going to hope and try. It's something that's very solid that I can actually put in writing and say, no, if you do what I'm telling you, I guarantee you'll be consistent, you'll be confident, you'll be stable, and you'll know how not to give money back. And if I may, I'll give you one example. I had one gentleman who's a client. He's got his retirement portfolio, and he's got a career, and he used the methodology to figure out, we just hit a new high in the market just before the coronavirus thing kind of took off, and when the market pulled back just a little bit, he gave back just a very small percentage, but he saw through market vulnerability analysis, this thing has suddenly shifted gears in like one day. And now we have an environment that's conducive for a significant downturn. So he immediately called his manager, his money manager, right, who takes care of the 401k, his long-term portfolio, and he says, hey, can you move my money into cash? So he moved all his monies into cash. And then in his little brokerage account, he took a short on the S&P 500. And so then the market, as you know, what happened for coronavirus, it just, it took a massive dump, right? He made 35% on his brokerage account in 2 days, and he saved himself the 30+% downturn on his major long-term retirement fund. And then when it kind of started to recover and bottomed out, he was able to ride a good portion of the upside. So that's the best of both worlds, isn't it?
Right. And so you just need somebody to show you how to do that. And that's kind of where you come in and act as that coach. The accountability is unbelievably true. Yeah. In really anything that you do. And as they say, what you look at, what you concentrate on grows. So if you're concentrating on your numbers, those numbers will grow. That's right. But if you're looking away, I mean, it's the same. I was on a Peloton bike that my wife had to have. And they tell you, watch your cadence, and you're looking down and at the numbers. And I noticed that every time I would like look up and then look down at the numbers, they always dropped. And so I would look at it, concentrate on it, and they would go up. And so you always have to be looking at your numbers. Yeah. Yeah. It's I think people kind of feel like, oh, it's just a lot of work. It's too much. Really, it's a very part-time effort during the week. So you can have a full-time endeavor and do this a little bit, just a little bit before that you go to work or start your day in the morning, or you can do it in the evening. There's no time of day that you have to plug into. We're in an interesting time in our lives to be able to engage in things where 24 hours a day things are open and available to us. It's no longer limited to certain time slots, and that's a real privilege, and it's a great opportunity for people that are listening to take advantage of and know that, hey, look, the less you know, probably the better you're going to do. Especially, I had this one client who had 10 years of experience. He came to me, and he and his wife and him came over, and they met with me for dinner. And she was a little bit frustrated with him because he wasn't really doing what he was supposed to do with what I taught him.
She's like, I got to ask you, Roger, why is my husband kind of just seemingly stuck in place? He's not kind of moving forward. And I said, well, that's interesting. I looked at her husband. I said, do you want to answer your wife? And he kind of smirked and chuckled a little bit. And she's like, what? Like, I just need to do what Roger tells me to do. I'm not doing what he's telling me to do. Well, why aren't you just doing? Why wouldn't you just do that? He's like, he's an engineer, by the way. He's got to break it down, reverse engineer it, figure it out. It's like, I just got to know how he figured this out. I got to know how he did this. I've been trying this for 10 years. I've invested in all these courses and programs, and no one's ever figured out what Roger figured out. I got to figure out how he figured it out. It's like, why don't you just do it? You're wasting all this time. And so she said, and then she says this, she says, oh, I wish I had the brains for this. I said, what do you mean? She's like, oh, Roger, I'm retired. We're in our 60s. We were high school sweethearts, didn't go out and have a career, don't have any academic background or business knowledge. My husband's the brains of the family. I just, I've homeschooled the kids and been a homemaker. I said, wait a second, why you talk like that's a disqualification? She's like, well, I'm just, I'm not the sharpest pencil in the box. I said, no, hold on a second. That's wrong. Don't say that about yourself. Number one. Number two, that how you see yourself actually is a bonus. She's like, what do you mean? I said, that will have you running circles around your husband if you want to learn this news for yourself. She's like, are you kidding me? I said, no. She says, you think I can do this? I said, of course. And so someone who's, trying to enjoy their golden years, right? Looking at, they're in the retirement phase, no academic background, no investment experience, no business experience, simple person. In like 4 months, she was up and she was literally running circles around her husband. And he's like, how are you doing this? Like, I'm just doing what Roger told me to do. Instead of trying to figure out and tinker with it and try it my own way.
Yeah.
So I say that I want to share that story with you and with your audience, just to let people know, if you're intimidated by money and investments, don't be. When you've got a simple process that gives you a very holistic understanding of what you're dealing with in a simplistic way, it's visually intuitive. There's nothing to be intimidated about, and it's just like a franchise, it could be, anything that you don't know, it's intimidating. And that's why guys like Tom are obviously here. It's like why guys are like myself. We've kind of dug up that path, figured out what not to do to help people avoid that hardship and that pain. And, some people just love teaching and are very rewarded by it, like myself. And I obviously, Tom, there's just such a satisfaction to be able to share with others. And so I just hope to encourage people who are a little bit intimidated by this stuff. Don't be. I think you'll be pleasantly surprised.
Yeah, I agree. And we also find in franchising the same thing. People that are not former business owners or people that, don't have a very high education in business or finance do really, really well because they just, quote unquote, follow the system.
That's right.
And there's some franchises out there, as an example, Supercuts hair cutting is a good example. If you have a barber's license or a beautician license, they will not grant you a franchise.
Interesting.
And that is counterintuitive on the face of it. But when you think about really what business ownership is, they don't want you to be that person that's in the store and Sally calls in sick and you're like, okay, no problem. I'll cut some heads today. And then the next day, and then you're like, hey, maybe I don't need Sally. And now you just bought yourself a job. Wow. And you plateau and you don't go anywhere.
Wow.
And so it's interesting that the fathers, the grandfathers of franchising figured that out a long time ago. And it's like, if you're an accountant, you don't need an H&R Block.
That's right.
An H&R Block probably won't grant you a franchise because you're coming with all sorts of baggage and bad habits.
It's so true. Tom, we're our worst enemy, right? Mm-hmm. I love one of your videos you did on, do you think like a tenant or do you think like a landlord? And I'm not going to spoil it, okay? But if you guys get a chance, go on his YouTube and just check out tenant or landlord with Tom. That was a great analogy, and I love that. And it's so true. We can really be our own worst enemy. We can kind of create stumbling blocks that don't exist. You probably heard the acronym for FEAR. FEAR, false evidence appearing real. Most things that we're afraid of, almost never happen. It's all in our head. It's imagined, right? And we make things harder than they really are. But I think really there's a wisdom in, look, the process is what delivers the results you want. So whether it's a franchise, whether it's in doing investment analysis that not only do you make gains, but you know how to keep them also, right? Don't wake up with a bad experience. It's always about applying the process that's going to deliver those results.
Absolutely. So I wanted to ask you this question that I actually wrote down. So how do you feel learning the skill of accurately forecasting the markets? How does that compare with franchising?
So franchising and accurately forecasting the markets, if somebody's watching this show, this is probably the most valuable piece of information you can get. Franchising and market vulnerability analysis are both proven processes, right? That have, you could say, safeguards against failure, right? Why do you want to buy a franchise? Because you don't want to go out, be guinea pig and test something that's unproven. So if you buy a franchise, you've already got a proven concept. You're going to walk in and right out of the gate, you're going to enjoy success without any of the learning curve, the nasty learning curve, right? Now, it's going to take some work. It's going to take some effort, but nothing worth it in life comes like that, right? But it's not really that hard either, right? And market vulnerability analysis is also a process that allows you to go into the market and see with total objectivity. And that's important. That's an important word because most of people's analysis is subjective to their interpretation, subjective to where they're at, what they're doing, who they're talking to. But when you have market vulnerability analysis, 100 people can look at the same thing and all agree. Kind of like if you and I sat in your car and we wanted to go down a 250-mile drive and you only have a quarter tank of gas in your car. You and I both know that with a quarter of tank of gas, there's no way that car is going to take us 250 miles down the road, right? But if we filled up, no problem, right? That is that objective. And it's visually intuitive. So there's no going to the engine, cracking it open, trying to figure out how much gas is in there and how it's a visual thing that tells you what you can expect that car to do. And so market vulnerability analysis gives you that visual, instant understanding of where's the market at environmentally? Do we have a sunny day or is it kind of stormy? And what's funny is most people don't realize it's usually stormy in the markets 70 to 90% of the time. So that means only 10 to 30% of the time at most is it actually conducive to be involved where you're productive and you're able to make steady, consistent profits without much of the downside risks available during those moments versus other moments where you're going to be up, but then you can ride back down. And so a lot of people are used to holding these downturns that are uncomfortable and they're hoping they'll recover. And so now that we've had these multiple years of a bull run, a lot of people make money, kind of feel smug. They feel kind of like they did something good. They've got all this money. But what happens when the market turns, becomes a bear market? What happens when it corrects significantly and keeps correcting or crashes? Suddenly those people kind of disappear. And so I think it's really important to protect against that. And market vulnerability analysis will give you the ability to limit and restrict your downside risk in the market, but without limiting or restricting your upside capital in a very unique way. And it's through that control, through that process. So it's not about trying to shoot for a specific financial outcome or a goal. The goal should be to apply the process as diligently as possible because the process is what delivers the results. But if you do that, the process promises the ability to be steady, consistent, and perform better than most people think they can achieve.
Absolutely. And you say that you could kind of guarantee those results, but I know you work with very selective people.
Yes.
So how could you guarantee results versus telling somebody, hey, just stay away from investing in stocks?
I love it. That's a great question. So the results that I guarantee is the ability to outperform the market and the ability to be consistent and the ability to have confidence and total objectivity if you apply my process properly. And both of us would know that, hey, I taught you this. Can you see this? When there's a quarter tank of gas, you tried going 250 miles down the road without stopping for gas. Was that part of the process? No, it's not. They'll know when they're breaking the rules. They'll know when they did something foolish. It's because it's literally that objective. And so I guarantee results because I can't tell you I'm going to guarantee you're going to make X percent, right? I can't, that's impossible because making money in the markets is going to be the only subjective thing about making money is going to be what the market makes available to you, and then your ability to apply the process correctly. So those are the two things. So I can't go create more opportunity. I can only identify when it's there and when the odds are stacked strongly in my favor to apply my process to have a successful outcome, right? Where I can see visibly what risk I have to take into account and how much reward there is. And that, by the way, that leads me to a very important point. We never go into the market or stay in the market when we see that there's more downside risk than there is at least in reward or return, right? For the to be able, and where the odds are in our favor. So in other words, you have to have an 80 to 90% probability of hitting your target, and you have to have at least the ability to make as much in return as you're willing to risk or more. Okay. Yeah. Does that make sense?
It makes a lot of sense.
That's what allows me to guarantee their results in terms of their success. But in terms of performance is, I can tell you that anybody who applied my methodology properly in the last 10 years, I don't have a person that hasn't outperformed the market, but by how much, that's going to be subjective to each person's personality, how they're wired, how they apply it.
Oh, you know what? It's so synonymous with franchising. The way you explain that, it's actually brilliant, because it's the same thing with franchising. People, like, want to just throw money at a franchise because they think it's a good franchise, but they're not looking at the 8 criteria that make a good franchise. They're just like, oh, but I like the food. There's always a line. That's not a reason for success and your success. And so you have to understand what your role is. So every franchise company has, the franchise owner has a role, and you could be making $1 million, a day in a business, but if you hate the role, that money gets old really fast.
Yeah.
And you end up losing the money because you mentally fall away, and then everything else will crash, just like, in stock. So you can't be infatuated with a franchise, just like you shouldn't be infatuated with a stock.
That's right.
Right. And you have to understand the universe it lives in, and, to use those criteria that you're using to identify the predictiveness of what's going to happen. We do kind of the same thing in franchising. Is, everybody knows to look at the return on investment. Yeah, okay. But there's so much more that goes into a great business model, and there's so much more that goes into a great stock or a great stock pick. So I think that's spot on, coming from where you're coming from.
I love that you shared that aspect, because that's another aspect people don't really give too much time and credence to, which is the emotional and mental aspect. I mean, if you buy a franchise just because it's successful, but you're hating it, that's money that's going to probably end up blowing up in your face, isn't it? Like you just said, because people will start to kind of work against themselves, because they'll start to kind of slip at things they kind of hate doing, and they don't want to do it. And so, and with the process, same thing. So one of the things that I do is evaluate people before I allow them, before I accept them into my training, because I want to look at the personality. I want to look at their situation. I want to look at their circumstance. And, just because you've got money doesn't mean that you're going to be a good candidate. People are always shocked, and it's always very awkward. It's one of the worst conversations, or one of the worst parts in my conversation with someone, is when I have to tell them, this really isn't good for you. You shouldn't be thinking about this at all. Go think about something else. This is not, you're going to self-destruct over here. I don't care how much money you have. But, I think having humility is such a critical component, and ego is coming to something like this with an ego is going to be detrimental. An open mind, the mind only works like a parachute. It works when it's open.
Yep.
You can't come with your own ideas. You gotta be willing to submit to a process that's already figured out, it's proven, it's tested, and like you said, there's a criteria for picking franchises. There's a criteria for understanding when it's time to be in the market, when you should be out, or when you should be taking defensive action, at least at minimum, right? So the mental aspect, I think, is so important. Part of what I teach is not just the process of analyzing, but also understanding the wisdom of, well, Roger, but I can forecast the market's going from here to there. And I can see that the odds are really good that's going to go from here to there. that there's enough return for the risk that I'm going to be taking. Why can't I take this position? Well, because aren't you also forecasting that you're in an environment that's very stormy? Well, yes, but still, no. Don't focus on the money. Focusing on the money will blindside you. Here's something that most people don't take into account. If you have to be in the market during a very stormy time and you're watching, you've actively taken a position in the market, your emotions, you're under stress. And so when you're under stress and emotional, the first thing that happens is you become subjective and you lose sight of the objectivity, and you start to make mistakes and you start to make decisions that work against yourself. And even though you know what's going to happen, you'll actually end up doing destructive things that won't get you to the results. And a great analogy, I love analogies, and I think you do too. So a great analogy is if you're running late to an important appointment, you know how to drive a car. You know the rules of the law, the land, right? The driving and everything, right? But what happens when you're late? You start to push that car a bit harder. You start to drive more aggressively. You push the envelope, and you're more likely to get, now your risk for getting a speeding ticket or getting in an accident increased dramatically because you're now driving that car differently because you're under pressure than you would if you were driving it without any pressure. Mm-hmm. So pressure is such a critical aspect. And for you, when you're helping people pick franchises, which is what I love, is you also look at that aspect of, look, are you going to really, don't look at the money here. Okay, the money is important, but not more important than your ability to enjoy what you're doing and not let it be stressful to you, right? And so I look at the same thing, and I teach people the same thing, is just don't get into stressful situations, even if it has a high probability to hit the target, because that's going to eventually feed on itself, and you can't help but do destructive things.
Right.
We're only human.
If you want the pressure and the stress, just keep your job.
That's right. Exactly.
This is great, Roger. I love this insight. And it's so, I'm actually surprised how synonymous it is with franchising. It is so great to have you on the podcast. How can people get in touch with you if they want to learn more about your products and services? Yeah.
So one of the best ways is to go to raiseyourfinancialiq.com. Raise your financial IQ, just the letter I, letter Q, .com. And there's a case study there. There's a nice kind of a 4-part series of education so that help them understand and see all the different examples, and there's proof elements and just a path where they can open their minds and see a different aspect of the market that really is an innovative first. I think one of the things that it's going to require for most people to do is have a little bit of a paradigm shift, because it's also very counterintuitive, very much like supercuts. If they won't take somebody who's got experience because they want them to follow the system and not come with their own ideas and put their own spin on it. Now, it's okay if you've got experience, right? But you have to be coming to this knowing that you're willing and totally ready to commit. You're resolved to commit and submit to the process, and not to submit to tinkering and doing your own thing with it. I think that's important. So if you go to raiseyourfinancialiq.com, you'll find that there's an opportunity there to get that information. And I look forward to meeting those who meet the requirements and end up booking an evaluation with me.
Yeah, well, that's great, Roger. And all that information will be on our website, thefranchiseacademy.com. So you may check it out there. Let's just see if this is a great fit for you. I definitely encourage you to reach out to Roger and understand what his offer is. And just want to thank you for being on, Roger.
Thank you for having me. This is a lot of fun. It was a pleasure. Great.
Yeah, this is really good and very different, but good for the Franchise Academy folks. So Absolutely. Thanks again, and we'll